What's going on, guys? Welcome back to DXB Crypto. And as the most hated cycle in crypto history continues, is there any light at the end of the tunnel? Are they playing with our emotions? And ultimately, are they going to crash this market to smithereens? Or are we going to do a new all-time highs on Bitcoin? As you can see here, we have faced a stiff resistance at $112,000, and that we attempted this several times. We can see here, we've attempted it several times, and over here as well, we have attempted that to break that level several times previously. So 112,000 is where it's at the moment, and that is where we're coming back down to right now. Probably the nearest support level on the daily is around $103,000, $104,000. Break that, and then we'll obviously readjust and just dip towards the $90,000 to $100,000 level. This is very interesting, guys, because while this is happening, I'm seeing encouraging signs on the MACD, especially about potentially Bitcoin bearish MACD cross, and that's on the dominant side. And this is going to be something that we need to monitor. All right, so retest the bearish cross on the trend line. You could actually see here the RSI as well is potentially about to break. So it's not all doom and gloom, but there is tons of macro stuff happening. And that you need to understand when the market is boring and sideways is when it's likely to absolutely kill people mentally, because there's not a lot happening. Let's be fair. And especially if you are leverage trading, you could get smoked. So be very careful until next week. You could see here in terms of the bubbles that the market right now is literally as red as it can be. Everything is down significantly enough to absolutely go shopping, but this market will turn around. So, you have to be super, super careful what you want to buy, what you want to hold. But right now, the picture is one of blood, and that's what's killing people. And people don't understand what's causing this. But before I continue with the show, I'd like to big up today's sponsors, Nansen.ai, where I do all of my intelligence, AI signals, smart money profiler, and Nansen and I have partnered because this is a quality channel for a small YouTube. And I know not everybody can get their partnership. So if you really want to use Nansen.ai, there is a link in my description and you'll get automatically 10% off their price. And of course, you can sign up for a Nansen on a free account. Nansen has a pioneer and a professional. Go check it out. But this is the best of the best of the best. And I'm really, really I'm delighted to be partnered with these guys. So yeah, check out Nansen, guys. Use the link in the description. You get tons of opportunities to actually make life-changing money using Nansen's AI signals, token hot contract profilers, chain analysis, exchanges, so many things on there, smart money wallets, tracking wallets. You could do everything there. So yesterday, the Fed chairman has come out, obviously, and he met with Trump at the White House. Things are not looking good, guys. Things are not looking good. So what's happening here? At the president's invitation, Powell met with President Trump, and of course, to discuss economic developments, including for growth, employment, and inflation. Fed statement said Chair Powell did not discuss expectation on monetary policy, except to stress that the path of the policy will depend on entirely the incoming economic information. Powell is just one of those annoying guys, right, that knows what he's doing at school, right? I'm sure you had one of those boffins in your class that top set on maths, English, and science. And, you couldn't hate them. You couldn't hate them for doing their job. However, this, of course, they're not going to tell us exactly what went down. The consensus of almost everybody is that the Fed should cut rates sooner rather than later. Too late, Powell, a man legendary for being too late. This is what, of course, Trump was saying. But we need to watch that. But other things are coming out of the White House, and check this out.
The president is now facing criticism from an unexpected source, billionaire Elon Musk. Musk, the Doge chief who was tasked with slashing the federal government, is critical of the president's so-called big, beautiful spending bill. Here's what he told David Pogue for CBS Sunday Morning.
So, I was like disappointed to see the massive spending bill, frankly, which increases the budget deficit, not just decrease it, and undermines the work that the Doge team is doing.
I actually thought that when this big, beautiful bill came along, I mean, like, everything he's done on Doge.
Doge has been a spectacular failure, so to speak. They cannot save money in a fiat credit-driven monetary system. Do you guys understand only 11% of all fiat globally is in circulation? The other, 89% is all in credit. So we are in a global credit financial system. And for Elon Musk to think, obviously, I'm going to come along and cut the budget deficit of the United States of America, that is absolutely naive, stupid, and, it doesn't work at all. They've not saved a dollar.
Doge gets wiped out in the first year.
I think a bill can be big or it could be beautiful. But I don't know if it could be both. My personal opinion.
Yeah, big, beautiful bill. It's not going to happen. And the Fed's going to print. The pivot is likely to be, well, this is what everybody is kind of like talking about right now. And of course, we talked about this bit in our show last night, where the Fed, of course, is now being forced to cut. So whether whether Powell goes in there and of course agrees with Trump or whatever, at the end of the day, people are afraid of tariffs. People are afraid of inflations. It's all fear, fear, fear.
All right, joining us now, talk about inflation, Art Laffer, former Reagan economist, Steve Moore, host of More Money, WABC Radio. How about that? Going to run some charts in rapid fire. First one's commodities, CRB index, pretty flat. Hadn't really moved all year. This is all year to date. Pretty flat, as you can see on the screen. Second one's the so-called break-evens, 10-year Treasury adjusted for the CPI. That one's zigged and zagged, but basically it's about the same today as it was at the beginning of the year. And last one's gold, which does show a rise, although it's flattened out lately. I think that's more of an uncertainty premium than it is an inflation premium. Steve Moore, I'd say it's pretty calm inflation report. This is from Unleash Prosperity. Yeah, I don't see much going on.
Yeah. Look, I've been wrong. I thought these tariffs would cause higher inflation. Tariffs are taxes, and consumers bear some of the costs of that, but it just isn't showing up in the numbers right now. It just really isn't. And if you look at, almost any measure of inflation right now, it's pretty tame. I mean, somewhere in the 2.5% to 3% range, which is a little bit higher than we want, but hardly a catastrophe. And I want to make one other quick point. There was that slight increase in the 30-year bond interest rate. And oh my God, the world's coming to an end. But that rate isn't really up much, and neither is the 10-year. So the point that I think a lot of people miss, it's not deficits that ruin the economy, it's government spending. So bring the spending down.
Yeah. But then again, if we bring the spending down, right, a lot of the pro-growth policies will not happen, and the electorate will get pissed off. So it's a catch-22 situation. So what happens every time? Again, no administration is different. It's the same thing every 4 years, every 8 years, whatever it might be. The global monetary policy and system currently depends on money printing. And I do believe, because M2 is up and governments around the world are printing stupid amount of money. In particular, look, the US M2 is absolutely going bonkers, right? So is the Chinese. So this is actually, this is crazy. This is now approaching $21.9 trillion. So take it for what you will. This happens every single time and every single cycle. Why would it be different this time? Now, one thing to note is, obviously, as we enter the weekend, of course, as Bitcoin starts to come down here, the USDT dominance is up significantly on the daily, and it can continue to be up because it's been oversold for a very long time. All right, so we could see a spike over there, of course. And if we do that, that's the, that 5% level is what I fear and above. I think that's always natural to look at that and to see where the market is. Of course, this is the total 3 crypto market cap. Let's put this onto the weekly. Right. So the total 3 right now is sitting at a very good level, and it does have incredible support on this $784 billion level, which has been a historic level there or thereabouts previously. So what we're looking at right now is where we are is $880+ million, $860 billion in terms of the total crypto market cap. So anyway, guys, there's nothing to fear, but what I would say is watch the dominance chart, because this is going to tell us a lot about where we're going to go. I think this week will be, this coming week might be sideways and chop, could be maybe a little dip, but overall, I think we do continue to get some maybe new all-time high for Bitcoin before ultimately they trap everyone and we get absolutely hammered. Now, ETH is looking much, much better. Weekly MACD is about to flip bullish, and this is going to go nuts. I mean, the targets for ETH are absolutely wild. Wild, wild, wild. But I did say that $6,000 to $12,000 would be a potential play for ETH. Between $8,000 to $12,000 is probably a realistic level to expect ETH. But let me know what you think. Are you macro afraid? I think things are about to take off. I genuinely believe that. I think altcoins are looking very, very good. ETH is looking good. Bitcoin is just doing what Bitcoin does. And it can't, nothing chops up forever. Things have to come back down to planet Earth, retest and continue moving. The macro picture is the interesting one right now. And any positive news will send Bitcoin to new all-time highs. But be careful out there, because right now the picture is extremely red. Opportunities to buy. On top of that, I think this would be the last kind of dip before we have a little bit of a pump and then a trap. Get everyone in, get everyone to panic sell their bags, keep the rest of the summer boring after July, and then trap everyone in. And then, of course, crypto, especially altcoins, bottom in September before sending this whole thing to Valhalla. At the moment, these are my theses. What is yours? Leave it in the leave it in the comments. Smash a like and let me know what you're accumulating in this red day. Take care, guys.